Hello everyone, PS from PS Invest plays here today. With the sky-high demand for semiconductors and the shortages for all the chips that are used in computers, data centers, we have seen that the stock prices of companies that design and manufacture these chips has skyrocketed. Is this trend going to continue, or we can expect a pullback? In today's video, we're going to look at two stocks in the semiconductor industry. We'll understand the business, their financials, review their charts using Elliott wave theory, and see how we can make money. So stick around. I think you'll like what I have in store for you today. All right, so the first one on our list is AMD, Advanced Micro Devices, ticker AMD. AMD is the second largest manufacturer of semiconductor chips, only behind Intel. It has a fast improving lineup of chips that address the laptop and PC markets, as well as hardware for data centers and the cloud computing services that are built on them. AMD is tiny when you compare it with Intel, with sales of just $11.4 billion over the last 12 months. But a 70% surge in revenue over the last year compared to Intel's 8% rise in revenue implies AMD is scooping up lots of new market share at the expense of its larger peer, Intel. AMD's plan of attack has centered around its suite of affordable chips that are used in computers, servers, also called as CPUs, GPUs, which are graphic processing units, and other processors for personal computing and enterprise data centers. It is adding a new chip type to its arsenal: field programmable gate arrays, FPGAs. These are used in everything from data centers to networking to industrial equipment. AMD is getting into this space with the acquisition of FPGA leader Xilinx. And this will test the mettle of Intel's FPGA business. The revenue, EBITDA, net income for AMD is phenomenal when you compare it over quarter, or when you compare it year over year. In the quarter ending March 31st, 2021, the revenue for the quarter increased by 93%. And year over year, it was over 57%. EBITDA has improved considerably. And the net income is phenomenal. However, I think AMD is reasonably priced at the current stock price, which is 38 times full year expected earnings per share. This is also indicative in the technical review, where I see short-term price decline. However, I'm extremely bullish long-term, and I'll show you why. If you look at the Elliott wave for AMD and go as far back as mid of 2015, we can see that the bull run that started mid of 2015 is not over. The third wave is completed, and we currently are in the fourth wave, which is a corrective wave. And that is why we've seen weakness in the stock price of AMD in the last couple of months. We have strong support around $77 and a resistance around $64. When do I think this pullback will get over? I think in the next 6 to 8 months, this pullback should get over, where I expect at least a 10 to 15% downside from the current stock price. taking the stock price in the vicinity of $65 to $70. I consider this as a buying opportunity, with the final price target for AMD to be around $125 in the next 5 to 6 years. If you buy the AMD stock today, or if you buy it around the $65 to $70 price range, you can expect a 54 to 79% upside potential in the next 5 to 6 years. This is my take on AMD. If you like this video, don't forget to subscribe, hit the like button. Now let's look at the second semiconductor stock, which looks extremely promising to me. Taiwan Semiconductor Manufacturing, ticker TSM. Now, AMD is one of the many chip research and design companies. But when it comes to actual manufacturing, it taps a company like TSM to fabricate its chip creations. Fabricate means nothing else but manufacture, the actual manufacturing. So AMD designs it and outsources it to TSM. AMD and TSM are thus are two different ways to invest in the same semiconductor industry. Put another way, AMD, which doesn't dole out a dividend, is more of a high growth stock, while TSM is a slower growth company relative to AMD, with a more stable business and a dividend payout. That alone might help you decide which is the better long-term stock for you. One with high growth potential, but that is more volatile, which is AMD, versus a dividend-paying business, which is TSM. TSM is an industry juggernaut. It passed up Intel a couple of years ago and is now the largest chip fabricator. In short, largest chip manufacturer in the world by a wide margin. It has a 57% global market share of the chip manufacturing market. TSM has been able to claim this dominant role in worldwide chip fabrication and distribution due to its advanced manufacturing technology. Its fabs handle the smallest and most powerful semiconductors around, powering trends like AI and 5G. It's also a highly profitable company, though profit margins fluctuate as manufacturing supply and demand ebbs and flows. The revenue, EBITDA, net income are extremely good for TSM. When you look at the quarter ending March 31st, 2021, the revenue increased by 25% year over year for the quarter. And for the last 12 months, it increased by 29%. EBITDA and net income are all showing extremely good results. Very similar to AMD, I think TSM is reasonably priced at 25 times full year expected earnings per share. Again, this is indicated in the technical review, where I see short-term price decline. However, long-term I'm bullish. The bull run that started in 1998 is still not over. We are in the most powerful bull wave for TSM, which is bull wave 3. If we take a closer look at this third wave, we seem to have completed the first 3 waves, and it seems we are almost at the end of the 4th wave pullback, where the price has dropped from as high as $145 to $115. I think the price for TSM should bottom out around $108 or $105. And starting from that point, it should march towards its new high, which I think should be around $169. Now, when should this pullback get over? I think in the next 3 to 4 months, this pullback should get over. Consider this again as a buying opportunity for TSM. And if you buy TSM around $108 or $110, or even if you buy today at $115, you can expect a 47 to 57% upside long term in the next 5 to 6 years. Let's summarize now. So AMD, short term, 6 to 8 months, expected 10 to 15% downside. This is a buying zone. Long term, 5 to 6 years, 54 to 79% upside potential. TSM, short term, 3 to 4 months, 6 to 8% downside, again a buying zone. And long term, 47% to 57% upside potential in the next 5 to 6 years. What do you think of this analysis today? Leave a comment and let me know. As always, don't forget to subscribe, hit the like button, and share this video with your friends and family. Until then, bye-bye.